in so many sectors, which makes it easier to expand their economic cooperation. Firstly, there is the macroeconomic enabler, meaning both Central Asia and India are among the world's fastest growing economies. Over the past 15 years, their economies have grown approximately twofold. Both India and Central Asia continue to demonstrate high rates of economic growth. For example, real growth in the global economy has averaged around 3.5% in the past 15 years. Meanwhile, Central Asia has grown by 4.5% and India by more than 6%. Secondly, there is the geographical enabler. Central Asia's strategic position as a bridge between Asia and Europe makes it of great importance, great geopolitical importance to India and other Eurasian states as well. Thirdly, there is the high potential of Indian businesses in Central Asia. India can offer experts and technical knowledge to Central Asia, for example, in areas like infrastructure, hospitality, and medical equipment. And there's also the potential of Central Asian states. Central Asia has great potential with its abundant natural resources. And let me give you some ratings. Kazakhstan ranks second in the world for uranium reserves and seventh for the rare earth metals. Kazakhstan and Uzbekistan rank between 10th and 12th globally for copper and gold reserves. Turkmenistan is fifth in the world for natural gas resource. And if we look at the macroeconomic situation, Central Asia's role in the global economy is becoming increasingly important. Its economies are growing fast and it has a young population with great potential for further development. So the reason's GDP is over $500 billion with more than 80 million people. In the past 25 years, Central Asia's GDP has grown more than 12 times, and its population has increased by 50%. Investments are actively flowing into Central Asia. And for example, the number of foreign companies in Kazakhstan has grown by 25% over the past few years. Foreign trade and foreign direct investment in Central Asia have more than doubled in 15 years, and now they're worth $200 billion. While Central Asian countries share similarities, they are quite different in fact. Kazakhstan, Uzbekistan, and Turkmenistan are the largest economies in the region. Kyrgyzstan and Tajikistan have relatively small economies. Still, all of them are closely connected. A common challenge that they all face is the fact that they're all landlocked countries. There are no operational land routes between India and Central Asia. It limits trade and investment between these two regions. However, transport and logistic networks in Central Asia are developing very rapidly. We will actually circle back to the question of transport and logistics opportunities a little bit later. And now I would like to hand over to Dr. Vishwanath to take this slide forward.
Well, thank you. Thank you very much, Mr. Madi. Good afternoon, ladies and gentlemen. To continue with our presentation, I shall briefly talk about the macroeconomic overview of India. Well, amidst the current global economic landscape that we are all witnessing, India has emerged as the bright spot, as the fifth largest economy in terms of nominal GDP, and has actually doubled from 2010 to $3.6 trillion that we are seeing in 2023. In terms of purchasing power parity, India ranks third globally. Well, according to the recent most estimates by the International Monetary Fund, the World Economic Outlook, India is estimated to become the fourth largest economy in 2025, with an estimated nominal GDP of 4.2 trillion. As our managing director had highlighted in her opening remarks, India is also expected to become the third largest economy by 2028. Well, India aspires to become a developed economy by 2047, which marks 100 years of India's independence. It is very interesting actually to note that India has in fact remained the fastest growing major economy in the world during 2023 and 2024, averaging close to 8% of GDP growth. Well, this is supported by a robust domestic demand and investment activity, which is driven by strong government and private consumption. Well, this presents an attractive environment for both domestic and foreign investment. Talking about population, with a population size of 1.4 billion people, it is the world's most populous country with a significant young and dynamic skilled working age population. Well, this turns out to be a demographic dividend for India. Speaking about trade, total foreign trade of India accounts for 46% of its GDP. Well, this reflects India's robust trade openness over the years. India is a major player in the global in global trade. It was the 17th largest merchandise exporter and the eighth largest merchandise importer globally in 2023, accounting for a share of 2.3% of global merchandise trade in value terms. Now, India's total merchandise trade has almost doubled from $575 billion to close to $1.1 trillion. And this has been with an annual average growth rate of around 6.7%. Talking about the composition of India's export basket, it remains fairly diversified, comprising primarily petroleum products, refined petroleum products, pearls, precious stones and metals, electrical machinery and equipment, machinery and mechanical appliances, and pharmaceutical products. Well, talking about the export destinations, US has been India's largest export destination. This is followed by the United Arab Emirates, Netherlands, China, UK, etc. Well, the surge in imports, on the other hand, could primarily be attributed to the rising demand for energy, particularly crude oil generated by increased industrial activity that is taking place in the economy and household consumption. Mineral fuels, naturally, and crude oils constitute close to 33% of India's total imports, which is the largest import item in our import basket. Electrical machinery and equipment, pearls, precious stones, and a few other organic chemicals, etc., are among the other important import items. Well, China was the largest import source for us. This is followed by Russia, the United Arab Emirates, and a few other countries. Well, talking about bilateral trade between India and Central Asian countries. Well, Central Asia's strategic location as a land bridge between Asia and Europe actually imbues it with undeniable geostrategic importance for India. This partnership encompasses a broad spectrum of sectors focusing on shared interests spanning economics, commercial opportunities, energy cooperation, etc. Well, India could be a very vital partner and a source of goods exports in diverse sectors, including in areas such as infrastructure, hospitality, medical equipments, to name a few. Well, India's trade relationship with Central Asian nations has exhibited an upward trend over the period. It has increased from $490.1 million to close to $1.7 billion in 23 and peaking at $2.2 billion in 2019. Well, Kazakhstan has been the largest trading partner for India in the region, with a total trade amounting to $890 million. This is primarily driven by India's imports of crude and inorganic chemicals. Uzbekistan has in fact emerged as the leading export destination for India. And this, while accounting for a substantial share of more than 45% in India's exports to the region. Kazakhstan accounts for 35% share in India's exports, and this is followed by other countries like Tajikistan, Kyrgyzstan, Turkmenistan, etc. Well, being neighboring landlocked economies, the total import demand in these economies has broadly been similar, has broadly been the same composition. Pharmaceutical products accounted for 38% of total exports from India to Central Asian countries, followed by electrical machinery, equipment, machinery and mechanical appliances, edible meat, fruits, among others. We're talking about the import landscape. Kazakhstan was India's primary supplier from the region, and this has accounted and contributed to more than 64% of India's total imports from the region. With India's imports of $212 million, Turkmenistan accounted for a share of 21.7% of India's total imports from the region, while Uzbekistan, Tajikistan, and Kyrgyzstan have been imports from these countries have been relatively modest. Talking about the composition of our imports, it is primarily constituted by mineral fuels and oils, and followed by fertilizers, organic chemicals, inorganic chemicals, rare earth minerals, and a few other edible vegetables and organic chemicals, etc. Moving on to the next slide, where we talk about the potential for enhancing India's trade relations with Central Asian countries. Well, India and Central Asian countries offer natural synergy for expanding economic cooperation among each other. There are huge complementarities, as was talked earlier in the opening remarks by our heads of the institutions. By capitalizing on these complementary strengths, both parties could actually witness a rewarding win-win situation, and, and this opens up huge opportunities for mutual trade engagement. Well, analysis from the study reveals huge export potential for for India for products such as electrical equipment, machinery, transport vehicles, pharmaceutical products, among others. With regard to India's imports from Central Asian countries, products such as mineral fuels, precious and semi-precious stones and metals, given their huge deposits, iron and steel, inorganic chemicals, fertilizers, and rare earth minerals present immense opportunities. Well, Central Asia's meager share in India's global imports actually further highlights the scope and the potential for increasing bilateral trade among the countries. But talking about bilateral investments between India and Central Asia, during the period 2010 to 2023, that is the period of analysis in the study that was undertaken, India was the 16th largest investor in Central Asia with a total envisaged capital expenditure of US $1.5 billion. Kazakhstan actually was the top recipient, attracting slightly more than 78% of Indian investments during the period. This was followed by Tajikistan, Uzbekistan, with modest investments flowing into those countries. Well, the Central Asian resource sector has proved to be attractive for Indian investors, with coal, gas, and oil being the largest, accounting for the largest share of investments to the tune of 65%. This is followed by renewable energy, accounting for around 18% of total investments. Well, the other sectors are textiles, pharmaceuticals, financial services, hotels, and tourism. Talking about FDI inflows from Central Asia into India, well, this has relatively been modest, with investments primarily coming in from Kazakhstan and Tajikistan. We're talking about the potential for enhancing this bilateral level of investments that we have between the two regions. Well, countries in Central Asia are actually endowed. Can we go to the next slide, please? So actually countries in Central Asia are endowed with rich natural resources, including substantial oil and gas reserves, diverse minerals, and a varied ecosystem. So while investment climates vary across these countries in the region, almost all countries have implemented policies supported by the respective vision strategies, vision documents, to attract investments into their countries, and into sectors of importance to them. Well, the abundance of natural resources presents a wealth of opportunities, of course, for increasing investment relations between the two countries. The study has identified sector-specific opportunities country-wise, but given the limited time that we have, I'll try to focus on the broad sectors which are of importance to all the Central Asian countries. Well, investments in logistics and transportation infrastructure is a very promising sector which invites investments into which could invite investments into the Central Asian region. With a growing middle class, Central Asia also offers opportunities for an investment in the agriculture sector, agriculture and food processing sector. Well, all these countries in Central Asia are actually endowed with diverse landscapes and a rich cultural history. So that contributes to a surge in leisure and religious tourism. Investment opportunities for Indian investors exists in the hospitality and tourism sector. Renewable energy is one emerging sector with immense scope in the solar and wind subdomains. Healthcare, ICT, textiles, manufacturing, petrochemicals, mining and metallurgy are some of the other conducive sectors for attracting investments into Central Asia. Well, given the thrust by the government of India, the Central Asian countries could perhaps explore investment opportunities in the renewable energy sector in India. Another sector could be agriculture and related activities, comprising focusing mainly on the MSME sector, farm mechanization, food processing. Well, these are all sectors where both India and Central Asian countries have expertise in respective domains, and we could actually collaborate to enhance the level of economic engagement between the two regions. I'll probably hand it back to my colleague, Mr. Madi, so that he can take the next few slides.
Yep.
And
Thank you, Dr. Vishwanath. And now we will look at the angle of transport and logistics because they're among the main challenges that hinder trade between India and Central Asian countries. Because right now, air transport is the only direct option, but it mainly works for high value and time sensitive goods such as perishable items and pharmaceuticals, for example. Most goods are shipped through the Suez Canal and the Black Sea ports, which can take up to 10,000 kilometers and slow down delivery times. And as we all know, high transport costs reduce the competitiveness of delivered goods and thus the volume of mutual trade. So, what can improve the situation? The international north-south corridor, transport corridor, has a lot of potential. However, it hasn't been fully developed yet because of administrative barriers and infrastructure bottlenecks. Recently, there also has been more focus on building physical infrastructure like the new Chabahar port and railways in Iran and Central Asia, as you can see on the slide. The north-south corridor can cut transport costs and distances and delivery times by 2 to 2.5 times. Connecting east and west corridors in Central Asia can create a strong logistic network that reaches all the major economic centers in the region. Now, let's move on to the concluding slide. And as I have mentioned earlier in the presentation, the report outlines several strategic recommendations for enhancing cooperation between India and Central Asia. First, it emphasizes trade development by focusing on goods with high export potential. For India, key products for boosting exports include machinery, transport vehicles, electrical equipment, and pharmaceuticals, among others. Meanwhile, Central Asia can significantly boost its exports to India by targeting mineral fuels, fertilizers, inorganic chemicals, and rare earth metals. Second, the report suggests collaboration on digital public infrastructure. India and Central Asian states could work together to develop digital infrastructure, including joint payment systems, for example. Third, it advocates for facilitating market entry by through joint ventures and technological collaboration. This could involve partnerships in sectors such as petrochemicals, renewable energy, textiles, tourism, hospitality, etc. Fourth, enhancing access to trade finance is crucial. Development finance institutions could create financial instruments or credit enhancement mechanisms targeted to support trade and investment between these two regions. Fifth, improving trade and border crossing facilitation is very essential. Customs and border crossing procedures need to be harmonized and modernized, and further digitalization is necessary for simplifying customs formalities. And sixth, the report highlights the importance of improving transport and logistics, as I have already mentioned. This includes electrifying Central Asia's main railways, modernizing existing roads, upgrading border crossing procedures, and even attracting investment for the construction and renovation of the transport infrastructure. But also implementing measures in soft infrastructure like harmonization, coordination, and digital transformation can also significantly boost economic engagement. To sum it up, Central Asia is an integral part of India's extended neighborhood. Strengthening India's engagement with Central Asia is strategically important for fostering the further development and prosperity in the regions. Thank you all for your attention. Now you can scan the QR codes to learn more about EDB and India Exim Bank's analytical reports and other analytical materials as well. So I would now like to hand over to our valuable and precious moderator. Thank you all.
Thank you so much. And I hope that I'm going to be expressing my thoughts and the thoughts of the whole audience. This has been truly insightful. Thank you so much for giving us the presentation, Mr. Aldanazarov and Mr. Jandala. And now, now that you all know about the report and you've seen some of the highlights, I invite you to scan the QR code that you see on the screen right now, the media specifically, to ask any questions, because the questions will be taken from the forms that are available at the QR code. Well, now that we've done with the report, let us swiftly go to the analysis, from analysis to application. And now we're going to hear about the practical instruments of trade finance that will ultimately translate this potential that we've just heard about into tangible commercial outcomes. And to elaborate on these vital mechanisms, I have the pleasure to welcome our esteemed experts, Ms. Olga Gaponova, who is the head of trade finance at the Eurasian Development Bank, and Ms. Trupti Matre, General Manager of the Trade Facilitation Group at the Export-Import Bank of India. Olga, may I please invite you to turn on your microphone? You have the floor.
Thank you, Anastasia. Your Excellencies, dear colleagues, ladies and gentlemen, thank you for inviting me to speak today. It's a real pleasure to join this discussion on how trade finance can act as a key enabler of trade between India and Central Asia. At the Eurasian Development Bank, we see trade finance as one of the most efficient tools to support regional trade. Unlike large infrastructure or investment projects, which can take years to prepare, trade finance allows us to respond quickly and directly to the needs of the businesses. And what do we do in practice? Can I have previous slide, please? Thank you. What we do, it's mainly conventional instruments such as letter of credits and bank guarantees. These tools may look simple, but they're very efficient. They reduce risks for importers and exporters. They speed up settlements, and perhaps most importantly, they build trust between partners in cross-border transactions. To give you a sense of scale, documentary operations already account for more than 10% of EDB's investment portfolio. This share demonstrates how relevant and in demand these instruments are among our clients. Let me illustrate this with a few examples of transactions we have already carried out with Indian counterparties. One example is an export transaction where we worked together with India Exim Bank. The EDB issued 9 performance bank guarantees denominated in both US dollars and Indian rupees. With these instruments, we secured supply of dump trucks from one of our member countries to a mining company in India. Another case is an import transaction. Here, the EDB issued a letter of credit along with advance payment and performance guarantees. These were arranged in cooperation with major Indian commercial banks. The instruments supported the supply of integrated treatment facilities from India for a large investment project in an EDB member country. These transactions show not only how our instruments work in practice, but also the potential to scale them further in cooperation with our partners in India. In addition to these instruments, we also use forfeiting. In this case, the EDB acts as the issuing bank of a letter of credit on the importer's side. Through forfeiting, we're able to extend long-term deferred payment terms to our clients, while at the same time ensuring that the exporter receives immediate financing. This structure helps our member country companies import capital goods and high-value equipment without creating excessive pressure on their cash flow. Another important dimension of our work is cooperation with export-import banks, development banks, and export credit agencies. Through these partnerships, the EDB uses special programs that support exporters. We raise concessional tied funding from designated institutions and then on-lend these resources to our clients in EDB member countries. The result is clear. Our clients get access to competitive financing conditions, which directly stimulates trade. Of course, present, much of our trade finance activity is linked to China, given its role as a major trade partner for Central Asian companies. But we're actively looking at opportunities to diversify this focus, and India is one of the most promising directions for us. Beyond financing individual deals, our broader goal is to help shape a steady long-term trade corridor between India and Central Asia. On India's side, we see strong interest in sectors like pharmaceuticals, machinery, and equipment. From Central Asia, there is a growing export potential in raw materials, energy, and fertilizers. Trade finance plays a bridging role here. It lowers trade barriers, it provides predictability, it allows businesses to take on longer large-term contracts, and it gives companies the confidence to explore new markets. Today, Central Asian countries are investing in new transport corridors and working to simplify trade procedures. India, in turn, views Central Asia as a promising market and strategic partner. This is exactly where institutions like EDB and Exim Bank can work together more closely. We can support individual deals between India and Central Asian companies. We can design joint financing program, develop co-financing mechanism, develop joint training and capacity building programs for exporters and importers to build trust and raise awareness about trade opportunities and trade finance options, and build platforms that make trade easier. Let me conclude with 3 key messages. Trade finance is not just about payments, it's a strategic driver of trade growth. At the EDB, we're committed to using it to strengthen links between Central Asia and key partners, especially India, and by deepening our cooperation with institutions like India Exim Bank, we can unlock much greater potential for mutual trade. Thank you very much for your attention.
Thank you, Olga. That was truly insightful. And we're quite excited now to hear from the General Manager of the Trade Facilitation Group at the Export-Import Bank of India, Ms. Trupti Mhatre. Please give us your insights and tell us what we can do together.
Thank you so much. And thank you, Olga, for a very interesting presentation covering Eurasian Development Bank's trade finance offerings. I will be specifically speaking on our trade finance program, which is called Trade Assistance Program. Can we move on to the next slide? Next slide, please. Thank you. So as there is immense potential and unlocked potential, in terms of trade finance, after post-COVID with the, in 2022, Exim Bank developed this new initiative, which is called Trade Assistance Program, to contribute to the reduction in the trade finance gap and to integrate India's economic engagement with its partner countries in post-COVID-19 world. Trade Assistance Program provides support through credit enhancement to trade instruments like letters of credit and guarantees, thereby enhancing the capacity of commercial banks to support cross-border trade transactions involving untapped markets where trade lines are constrained or where potential has not been harnessed. Coming to the objectives of TAP, basically, the Trade Assistance Program is focusing to increase the counterparty confidence in the settlement of trade transactions, generate incremental exports by accessing identified, untapped and challenging markets, provide a market entry mechanism to the Indian exporters and the emerging companies while enhancing geographical coverage for exporters and with the special focus on the MSMEs. It also offers risk coverage for challenging trade transactions and enable local banks in target countries to establish working partnerships with a large number of commercial banks in India. Next slide. Broadly, the features of the TAP. The program envisages that Exim Bank, by leveraging its experience and network of alliances, will establish partnerships between commercial banks in India and identified overseas banks that can seek risk mitigation support under the bank's trade assistance program. TAP offers participating commercial banks in India partial or full guarantees to cover payment risk on banks in the overseas markets, and at the same time also facilitates Indian banks in meeting their commitment by arranging fronting of their guarantees to encourage participation of Indian contractors to win and execute projects in the target market. Moving to the next slide. These are the various offerings under the TAP. How we provide the credit enhancement, the one of the mechanism that we has implemented is the standby letter of credit. Under the standby letter of credit, India Exim Bank provides the 100% covered, which covers the credit risk to the extent of 100%, and the covers entirely the non-payment risk by the LC issuing bank for supporting the exports from India. We also encourage the risk participation with various partner banks in India. Under risk participation, India Exim Bank provides the credit enhancement to the extent of 90% of the eligible transactions, covering exports of eligible goods and services from India. We also support the irrevocable reimbursement undertaking IRU mechanism under the trade assistance program, where we support the IRU in favor of commercial banks in India and under LCs issued by the issuing banks. We also cover the transactions. We also provide directly the LC confirmation services where the banking sector in India is constrained in terms of the available limits on the LC issuing bank, or in case where the risk perception of a particular country or of a issuing bank is perceived to be on a higher side, and in case they are not able to support any particular transaction from India, there the trade assistance program comes useful, and we ourselves step into the shoes of the LC confirming bank in India, and we ourselves can offer LC confirmation as well as negotiation services for supporting the incremental exports from India. We increasingly support fronting of guarantees using a wider network of alliances and the SWIFT arrangements with the various banks over more than 70 countries all over. Funded facilities, we also actively engage with our partner banks in various regions by way of extending the funded assistance we call it as a credit line, which are the loans extended to overseas partner banks for onward lending to the importer of the Indian products and services. These funded facilities could be of a short-term, long-term, and medium-term tenors, and we also increasingly do the trade loan structures under our trade assistance program. Moving to the next slide. Under trade assistance program framework arrangements, we have the issuing bank agreement arrangement we entered into between India Exim Bank and overseas LC issuing bank to undertake these transactions. We also entered the confirming bank agreement with the Indian partner banks for supporting the transactions from India to the various parts of the world. And we also have the master risk participation arrangement MRPA, which facilitates the risk participation and the credit enhancement from India Exim Bank to the LC confirming banks in India under this program. Since its inception, we have partnered over 140 overseas banks, providing reliable conduit for linkages between India and overseas banks for facilitating exports from India. We can move to the next slide, please. Since its inception, the bank has facilitated over 1,400 transactions across 53 countries under our trade assistance program, including relatively untapped geographies and countries with higher risk perceptions. By increasing confidence in trade settlements, trade assistance program has led to over $1.18 billion of incremental exports by more than 170 exporters across diverse sectors. Countries across Africa, South Asia, East Asia, Latin America, Middle East, and Central Asia have been covered under trade assistance program, which include the Bangladesh, Nepal, Sri Lanka, Argentina, Ecuador, Cameroon, Egypt, and so on. We also have Uzbekistan and Tajikistan supported under our program since its inception. Indian exporters supported under TAP include again a mix of MSMEs and large corporate across industries such as iron and steel, agriculture, chemical, education, automotive, textiles, etc. Next slide, please. 71 countries have been identified basis the export basket of India, and Africa, 31 countries, Latin America, 15, and Asia, 16 countries have been covered. But main focus again is on Europe and the Central Asian region, which includes Armenia, Azerbaijan, Georgia, Kazakhstan, Kyrgyzstan, Tajikistan, and Turkmenistan, Uzbekistan. So we are focusing very specifically and obviously to the untapped potential between India and the region. Next slide, please. We have been closely engaging with the Central Asian partner banks, and collaboration under TAP so far includes guarantee facilities to the extent of 7.43 million in Tajikistan, where we supported the power transmission line project. We have also supported procurement of equipments in the automotive industry and supply of books and stationery. We recently have also engaged with Asaka Bank by extending a credit line to support the trade between India and Uzbekistan. And we are also closely connecting with various banks listed here: Eurasian Development Bank, Kazakhstan, Central Credit Bank, Kazakhstan, few banks in Uzbekistan like Asaka Bank, KDB Bank, Uzbek Industrial and Construction Bank, Orient Bank in Tajikistan, Belarus Bank in and Kyrgyz Investment and Credit Bank in Kyrgyzstan. And we are looking forward to expanding this network and closely working with the identified countries and our institutional partners in these countries for supporting the trade between India and the Central Asia under our trade assistance program. Thank you.
Thank you so much, Ms. Mpatre, for this exceptionally lucid and comprehensive overview of the available frameworks. Your expertise in placing the financial tools in action are really appreciated. And now we're going to open the floor for questions for our distinguished audience. So I'm going to invite all of our panelists to switch on their cameras. I see that has already been done. And I'm saying that Ms. Trupti Mpatre is now on the screen. And so it happens that the first question goes to you, Ms. Mpatre. Yes, we're first going to the Q&A now. Thank you. So, Ms. Mpatre, how does Exim Bank view the potential for collaboration with commercial banks to expand trade finance access, especially with SMEs engaging in India, Central Asia trade? And also the question entitles and goes forward, what models of partnerships could be most effective?
Thank you. As I was explaining, with the commercial banks in the Central Asian region, we are actively having a dialogue for having our issuing bank arrangements under the framework, one of the agreement where we establish the relationship with the LC issuing banks in the region. Once we have this framework agreement signed between two institutions, it's the process of onboarding the LC issuing bank on our trade assistance program is completed. And once this is completed, we can support, confirm, or provide the credit enhancement to our partner banks in India, which are the various other LC confirming banks in India, by way of providing SBLC, the risk participation, and any kind of a support which is needed under our trade assistance program. So the main strategy is to enhance our network by way of executing the issuing bank agreements, so that the institutional linkages are established with the institutional partners in the region, and we start supporting the LCs issued by them. We can also front the guarantees which are issued by our partner banks who are looking to issue the guarantees in India. As also, we will be using the services and collaborate with the partner banks for availing their services for fronting the guarantees of Indian exporters, like performance guarantees, advance payment guarantees. And this collaboration is something that we are keen on working, and we are looking forward to engage with our partner banks in the region.
Thank you so much for the very detailed answer. And now the next question is going to Olga Gaponova. I'm seeing that there are a lot of things happening in the question list about the sectors in Central Asia which are most frequently using trade finance through the EDB. Could you name some of those, Olga, please?
Thank you for the question. As a development bank, EDB primarily supports large-scale projects that are important for the sustainable growth of our member countries. That is why most of our trade finance activity is linked to energy projects, of course, with special focus on green energy, as well as the construction of major industrial facilities in sectors like metallurgy and chemistry. In these cases, trade finance instruments such as letter of credit and guarantees are usually used as part of a comprehensive financing package. The EDB often acts as the main lender for such investment projects, and trade finance becomes an additional tool to secure the supply of equipment and services from international partners. This approach allows us not only to finance the projects themselves, but also to ensure smooth execution of contracts and timely delivery of high-value equipment that is essential for the implementation. Thank you.
Wonderful. Thank you so much. I hope that everyone who's asked about the sectors took notes, because that was quite elaborate. Thank you, Olga. So the next question is going to Dr. Vishwanath. If we may have the camera on him. So the question goes, in central years, how do you see the role of the services sector in enhancing bilateral economic cooperation between India and other countries in Central Asia?
Well, thank you very much, Anastasia, for that interesting question from the audience. Well, I would say India has been a services-driven economy, with the sector contributing to around 55% of gross value added in 24-25. In terms of services exports, India is the 8th largest global services exporter in 2024, accounting for a share of around 4.3%. The competitiveness of Indian services exports is well recognized globally. So from financial services, construction services, engineering, management consultancy services, Indian firms have possessed the expertise and manpower required to contribute significantly to host country economic development and in countries in Central Asia as well, especially given the huge infrastructure demand and the economic activity that is happening in the region. Well, there are several, I'd say there are several services-driven sectors which could present mutually rewarding collaboration between India and countries in Central Asia. Well, if we talk about the cooperation in digital public infrastructure, well, India has built a very strong and robust digital economy driven by robust digital public infrastructure, contributing significantly to economic development in the country. Well, when I'm talking about DPI, I must mention about Aadhaar, which is a unique identification system launched by the government of India, which uses actually biometrics and other data to identify citizens and is used for a whole lot of services delivery mechanisms in the country. This could be something that's interesting to countries in Central Asia as well. Well, another important digital tool in the field of banking and financial services is the Unified Payment Services Payment Interface, which is developed by the Government of India, the National Payments Council of India, in coordination with our central bank, the Reserve Bank of India. Well, this has actually picked up and this has become a very sought after mechanism for making payments in the country. This is again something, this is very cost effective, very efficient, and easily used across by all sectors, by all population, by all people in the economy. So that's something that again we could collaborate on with countries in Central Asia. Without going much into the details, perhaps healthcare and tourism, healthcare, logistics and transport network, telecommunications, information technology, IT-enabled services, tourism. These are the other services sector, other services where India has proven expertise globally and probably could be able to share and collaborate with countries in Central Asia. And I very strongly feel that the services sector holds immense potential for contributing to enhancing this bilateral engagement between India and Central Asia. Well, thank you. I'll probably stop here and thanks.
Thank you so much. I hope that we can read more about that in the report, right?
Yes, certainly.
Okay, so whoever's interested in more details, either scan the QR code on the screens and send us a question, or go directly to the report because that's where all the knowledge is published right now. And now, to be fair and square to everyone, I'm going to address a question to Mahdi. Mahdi, could you please comment on the fact that we've already mentioned the 5% growth of Central Asian economies? Could you please highlight the factors that have driven this growth and how sustainable do you see the growth in long term? Thank you.
Thank you, Anastasia, and thank you for such an interesting question from the audience again. And Central Asian countries are indeed performing better than in any time during the past 10 years. And there's every reason to believe that this high economic growth will continue. And according to our estimates, for example, Kazakhstan and Uzbekistan will grow by around 6%, while the economies of Kyrgyzstan and Tajikistan will grow by around 8%. And despite the external factors, the region's economies are showing steady growth driven by internal factors. First and foremost is the domestic investments in infrastructure and industry. For example, the Kazakhstan's government plans to allocate 8 trillion tenge, which is about 6% of their GDP, towards new investment projects. And this type of funding will give a long-term boost to such sectors such as manufacturing, transportation, and construction. And another important factor for sustainable growth is improving transport connectivity in the region. And this increases trade volumes and reduces transport costs for exporting and importing goods. The Eurasian transport network has been created in Central Asia, and the international north-south transport corridor is also undergoing active development. So transportation along its eastern route, which passes through Central Asia, has tripled over the past year. Transportation along the middle corridor is also growing steadily, which is a good thing. And according to the EDB Transport Observatory, which was released quite recently, more than 90 projects worth more than $50 billion are being implemented or planned for the development of transport corridors in Central Asia by 2035. So if we keep in mind all these internal factors, the sustainable growth is expected to continue in Central Asia. And thanks again for such an interesting query.
Some very interesting years ahead of us, judging
Yep.
by all your answers. Thank you so much, our wonderful speakers. It was a pleasure. I'm afraid that we'll have to conclude the Q&A session at this, but whoever is sending questions in, because I'm hearing notifications, please be sure that we will be answering those questions in writing. So our dear experts, hopefully you will find the time to take a look at the questions and get back to our wonderful audience. And now, to formally conclude today's proceedings, it is my real privilege to invite Mr. T.D. Shivakumar, the Chief General Manager of the Export-Import Bank of India, to deliver a vote of thanks. Mr. Shivakumar, you have the floor.
Yeah, I suppose I'm audible. Thanks, Anastasia. Senior representatives from industry, trade associations, and various business chambers, colleagues from peer institutions, representatives from media, ladies and gentlemen. It's been a privilege to have you all in the webinar today from different time zones. On behalf of Eurasian Development Bank and India Exim Bank, I extend our gratitude to Mr. Nikolai, Podguzov, Chairman of the EDB Management Board, and Ms. Harsha Bangari, Managing Director, India Exim Bank, for your gracious presence today. Sir and Madam, your welcome remarks set the tone for today's webinar. I would also like to express my sincere thanks and appreciation to Ms. Olga Gapanova, Head of Trade Finance Department at EDB, and my colleague Ms. Trupti Matre, heading the Trade Facilitation Group in India Exim Bank, for sharing their insightful perspectives on trade finance as an enabler to enhancing India-Central Asia trade. With the expertise on this subject and depth of knowledge, you have highlighted the pivotal role that trade finance could play in facilitating and accelerating economic cooperation and trade between our countries and regions. Enhancing trade facilitation measures is an important step towards unlocking Central Asia's economic potential. This could drive rapid regional growth, strengthen bilateral trade with India, and position the region as a dynamic hub within the supply chain. In fact, I fondly remember the interactions with EDB about 5-6 years back when we supported a transactions between Belarus and India for dumper trucks. So I think we have been interacting for so many years. We also had the privilege of a joint publication titled Exploring Trade and Investment Relations between India and Central Asia, Unlocking Economic Benefits, getting released today. I'm confident that this study would serve as a good reference publication, offering key insights and policy recommendations towards enhancing commercial and economic engagements between India and countries in Central Asia, while promoting bilateral trade and investment. I'm sure this study would be of interest to both companies and policymakers in our respective regions. My congratulations to the co-authors of this joint research publication. In fact, we have been planning to have this joint release for many months, but I'm happy that at least it fructified today. My sincere thanks to Mr. Aldenarao from the Research Department of EDB and my colleague, Dr. Vishwanath from Research Analyst Group in India Exim Bank for being part of this joint study and for nicely presenting the key findings of this joint research study with all of us today. We have observed that India's trade relationship with Central Asian nations has shown a consistent upward trajectory over the past decade. I'm confident that this positive momentum will continue and grow manifold in the years to come, driven by deepening economic cooperation and shared strategic interests. Again, I fondly remember a bilateral meeting between India Exim Bank led by our Deputy Managing Director, Shri Tarun Sharma, in Georgia during the sidelines of ADB annual meeting, and where we started discussing about releasing this research publication, and over a period of time, we have brought this seminar together, and I think there is a lot more we can do as two institutions. While our traditional cooperation in oil and gas remains important, and believe the future of our partnership lies in expanding collaboration across emerging sectors such as agribusiness, renewable energy, healthcare and pharmaceuticals, as well as IT and ICT, as was also highlighted in the presentation earlier during this session. We are indeed grateful to all our distinguished guests and other participants without whom this could not have been successful for joining us in this webinar today and for interesting questions presented during the question and answer sessions. A few of them have been answered during the webinar and the balance will be answered by email. You can take it for sure. We deeply value your participation and look forward to your continued support. A special word of thanks to the representatives from the media for extending their continued support to EDB and India Exim Bank as always. Last but not the least, a special word of appreciation to the EDB and India Exim Bank teams, which have worked very hard for the last few months. I've seen tremendous number of emails at very odd times for organizing this webinar. I'd like to remind our audience that the copy of this joint report would be downloaded from the website of either ADB or India Exim Bank. Once again, thank you all for your participation in today's webinar. Wish you all a very good evening for the rest of the day. Thank you.
Thank you, Mr. Shivakumar, for the vote of thanks, and thank you for the brief history of the cooperation between our two banks. That was indeed very insightful. I didn't know half of it. And thank you for formally closing this productive dialogue. And now, dear speakers, distinguished guests, colleagues, as we reflect on the profound sense of opportunity that has been articulated today, please let us remember that the historic ties between India and Central Asia are being reimagined through the lens of finance, trade, infrastructure, and shared digital features. Once again, from the EDB side and from the side of the India Exim Bank, we are expressing our profound gratitude to everyone who took part in the webinar, including our heads of banks, our dearest speakers, our representatives of the banks, and representatives of the media, and the participants of this webinar. Thank you. Thank you for all the questions that you've sent in. And thank you for sharing the time and spending this day with us, wherever you are. Remember that this is not a conclusion, but an invitation to be continued in dialogue and action. The full report, as my colleague, Mr. Shivakumar just mentioned, is available on both websites. And now I would like to conclude the webinar. Thank you very much for being here with us today, and I wish you all a productive and successful day ahead. Goodbye.